Paragraph A shall not apply with respect to any discharge during any taxable year unless the taxpayer includes the taxpayer's Social Security number on the return of tax for such taxable year. 2. Social Security number. For purposes of this subparagraph, the term Social Security number has the meaning given such term in Section 24H7. B. Omission of correct Social Security number treated as mathematical or clerical error. Section 6213G2, as amended by this Act, is further amended by striking "and" at the end of subparagraph 5, by striking the period at the end of subparagraph W, and inserting "and by inserting after subparagraph W the following new subparagraph. X. An omission of a correct Social Security number required under Section 108 F5C relating to discharges on account of death or disability. C. Effective date. The amendments made by this section shall apply to discharges after December 31st, 2025. Section 70120. Limitation on individual deductions for certain state and local taxes, etc. A. In general, Section 164B6 is amended, 1, by striking "and before January 1, 2026, and 2, by striking $10,000, $5,000 in the case of a married individual filing a separate return, and inserting the applicable limitation amount, half the applicable limitation amount in the case of a married individual filing a separate return. B. Applicable limitation amount. Section 164B is amended by adding at the end the following new paragraph. 7. Applicable limitation amount. A. In general. For purposes of paragraph 6, the term applicable limitation amount means 1. In the case of any taxable year beginning in calendar year 2025, $40,000. 2. In the case of any taxable year beginning in calendar year 2026, $40,400. 3. In the case of any taxable year beginning after calendar year 2026 and before 2030, 101% of the dollar amount in effect under this subparagraph for taxable years beginning in the preceding calendar year. And 4. In the case of any taxable year beginning after calendar year 2029, $10,000. B. Phase down based on modified adjusted gross income. 1. In general, except as provided in Clause 3, in the case of any taxable year beginning before January 1st, 2030, the applicable limitation amount shall be reduced by 30% of the excess, if any, of the taxpayer's modified adjusted gross income over the threshold amount, half the threshold amount in the case of a married individual filing a separate return. 2. Threshold amount. For purposes of this subparagraph, the term threshold amount means 1. In the case of any taxable year beginning in calendar year 2025, $500,000. 2. In the case of any taxable year beginning in calendar year 2026, $505,000. And 3. In the case of any taxable year beginning after calendar year 2026, 101% of the dollar amount in effect under this subparagraph for taxable years beginning in the preceding calendar year. 3. Limitation on reduction. The reduction under Clause 1 shall not result in the applicable limitation amount being less than $10,000. 4. Modified adjusted gross income. For purposes of this paragraph, the term modified adjusted gross income means adjusted gross income increased by any amount excluded from gross income under Section 911, 931, or 933. C. Effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2024. Chapter 2. Delivering on presidential priorities to provide new middle-class tax relief. Section 70201, no tax on tips. A, deduction allowed. Part 7 of Subchapter B of Chapter 1 is amended by redesignating Section 224 as Section 225 and by inserting after Section 223 the following new section. Section 224, qualified tips. A, in general, there shall be allowed as a deduction an amount equal to the qualified tips received during the taxable year that are included on statements furnished to the individual pursuant to Section 6041D3, 6041AE3, 6050WF2, or 6051A18, or reported by the taxpayer on Form 4137 or successor. B, limitation. 1. In general, the amount allowed as a deduction under this section for any taxable year shall not exceed $25,000. 2. Limitation based on adjusted gross income. A, in general, the amount allowable as a deduction under subsection A after application of paragraph 1, shall be reduced, but not below zero, by $100 for each $1,000 by which the taxpayer's modified adjusted gross income exceeds $150,000, $300,000 in the case of a joint return. B, modified adjusted gross income. For purposes of this paragraph, the term modified adjusted gross income means the adjusted gross income of the taxpayer for the taxable year increased by any amount excluded from gross income under section 911, 931, or 933. C, tips received in course of trade or business. In the case of qualified tips received by an individual during any taxable year in the course of trade or business, other than the trade or business of performing services as an employee of such individual, such qualified tips shall be taken into account under subsection A only to the extent that the gross income for the taxpayer for such trade or business for such taxable year, including such qualified tips, exceeds the sum of the deductions other than the deduction allowed under this section, allocable to the trade or business in which such qualified tips are received by the individual for such taxable year. D, qualified tips. For purposes of this section, 1, in general, the term qualified tips means cash tips received by an individual in an occupation which customarily and regularly received tips on or before December 31, 2024, as provided by the Secretary. 2, exclusions. Such terms shall not include any amount received by an individual unless A, such amount is paid voluntarily without any consequence in the event of non-payment, is not the subject of negotiation, and is determined by the payer. B, the trade or business in the course of which the individual receives such amount is not a specified service, trade, or business as defined in section 199A(d)(2). And C, such other requirements as may be established by the Secretary and regulations or other guidance are satisfied. For purposes of subparagraph B, in the case of an individual receiving tips in the trade or business of performing services as an employee, such individual shall be treated as receiving tips in the course of a trade or business which is a specified service, trade, or business if the trade or business of the employer is a specified service, trade, or business. 3, cash tips. For purposes of paragraph 1, the term cash tips includes tips received from customers that are paid in cash or charged, and in the case of an employee, tips received under any tip-sharing arrangement. E, Social Security number required. 1, in general, no deduction shall be allowed under this section unless the taxpayer includes on the return of tax for the taxable year such individual's Social Security number. 2, Social Security number defined. For purposes of paragraph 1, the term Social Security number shall have the meaning given such term in section 24H7. F, married individuals. If the taxpayer is a married individual within the meaning of section 7703, this section shall apply only if the taxpayer and the taxpayer's spouse file a joint return for the taxable year. G, regulations. The Secretary shall prescribe such regulations or other guidance as may be necessary to prevent reclassification of income as qualified tips, including regulations or other guidance to prevent abuse of the deduction allowed by this section. H, termination. No deduction shall be allowed under this section for any taxable year beginning after December 31, 2028. B, deduction allowed to non-itemizers. Section 63B is amended by striking "and" at the end of paragraph 3, by striking the period at the end of paragraph 4 and inserting "and by adding at the end of the following new paragraph. 5, the deduction provided in section 224. C, omission of correct Social Security number treated as mathematical or clerical error. Section 6213G2, as amended by the preceding provisions of this Act, is amended by striking "and" at the end of subparagraph W, by striking the period at the end of subparagraph X, and inserting "and by inserting after subparagraph X the following new subparagraph. Y, an omission of a correct Social Security number required under section 224E relating to deduction for qualified tips. D, exclusion from qualified business income. Section 199AC4 is amended by striking "and" at the end of subparagraph B, by striking the period at the end of subparagraph C, and inserting and by adding at the end of the following new subparagraph. D, any amount with respect to which a deduction is allowable to the taxpayer under section 224A for the taxable year. E, extension of tip credit to beauty service business. 1, in general, section 45BB2 as amended is amended to read as follows. 2, application only to certain lines of business. In applying paragraph 1, there shall be taken into account only tips received from customers or clients in connection with the following services. A, the providing, delivering, or serving of food or beverages for consumption if the tipping of employees delivering or serving food or beverages by customers is customary. B, the providing of any of the following services to a customer or client if the tipping of employees providing such services is customary. 1, barbering and hair care. 2, nail care. 3, aesthetics. 4, body and spa treatments. 2, credit determined with respect to minimum wage in effect. Section 45BB1B is amended, A, by striking as in effect on January 1, 2007, and B, by inserting, and in the case of food or beverage establishments, as in effect on January 1, 2007, after, without regard to Section 3M of such act. F, reporting requirements. 1, returns for payments made in the course of a trade or business. A, statement furnished to Secretary. Section 6041A is amended by inserting, including a separate accounting of any such amounts reasonably designated as cash tips, and the occupation described in Section 224D1 of the person receiving such tips after such gains, profits, and income. B, statement furnished to payee. Section 6041D is amended by striking and at the end of paragraph 1, by striking the period at the end of paragraph 2, and inserting and by inserting after paragraph 2 the following new paragraph. 3, in the case of compensation to non-employees, the portion of payments that have been reasonably designated as cash tips and the occupation described in Section 224D1 of the person receiving such tips. 2, returns for payments made for services and direct sales. A, statement furnished to Secretary. Section 6041A is amended by inserting, including a separate accounting of any such amounts reasonably designated as cash tips and the occupation described in Section 224D1 of the person receiving such tips, after amount of such payments. B, statement furnished to payee. Section 6041AE is amended by striking and at the end of paragraph 1, by striking the period at the end of paragraph 2 and inserting and by inserting after paragraph 2 the following new paragraph. 3, in the case of subsection A, the portion of payments that have been reasonably designated as cash tips and the occupation described in Section 224D1 of the person receiving such tips. 3, returns relating to third-party settlement organizations. A, statement furnished to Secretary. Section 6050WA is amended by striking and at the end of paragraph 1, by striking the period at the end of paragraph 2 and inserting and by adding at the end the following new paragraph. 3, in the case of a third-party settlement organization, the portion of reportable payment transactions that have been reasonably designated by payers as cash tips and the occupation described in Section 224D1 of the person receiving such tips. B, statement furnished to payee. Section 6050WF2 is amended by inserting, including a separate accounting of any such amounts that have been reasonably designated by payers as cash tips and the occupation described in Section 224D1 of the person receiving such tips after reportable payment transactions. 4, returns related to wages. Section 6051A is amended by striking and at the end of paragraph 16, by striking the period at the end of paragraph 17 and inserting and by inserting after paragraph 17 the following new paragraph. 18, the total amount of cash tips reported by the employee under Section 6053A and the occupation described in Section 224D1, such person. G, clerical amendment. The table of sections for Part 7 of Subchapter B of Chapter 1 is amended by redesignating the item relating to Section 224 as relating to Section 225 and by inserting after the item relating to Section 223 the following new item. Section 224, qualified tips. H, published list of occupations traditionally receiving tips. Not later than 90 days after the date of the enactment of this act, the Secretary of the Treasury or the Secretary's delegate shall publish a list of occupations which customarily and regularly received tips on or before December 31, 2024 for purposes of Section 224D1 of the Internal Revenue Code of 1986 as added by subsection A. 1, withholding. The Secretary of the Treasury or the Secretary's delegate shall modify the procedures prescribed under Section 3402A of the Internal Revenue Code of 1986 for taxable years beginning after December 31, 2025, to take into account the deduction allowed under Section 224 of such code as added by this act. J, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2024. K, transition rule. In the case of any cash tips required to be reported for periods before January 1, 2026, persons required to file returns or statements under Section 6041A, 6041D3, 6041AA, 6041AE3, 6050WA, or 6050WF2 of the Internal Revenue Code of 1986, as amended by this section, may approximate a separate accounting of amounts designated as cash tips by any reasonable method specified by the Secretary. Section 70202, no tax on overtime. A, deductions allowed. Part 7 of Subchapter B of Chapter 1, as amended by the preceding provisions of this Act, is amended by redesignating Section 225 as Section 226 and by inserting after Section 224 the following new section. Section 225, qualified overtime compensation. A, in general, there shall be allowed as a deduction an amount equal to the qualified overtime compensation received during the taxable year and included on statements furnished to the individual pursuant to Section 6041D4 or 6051A19. B, limitation. 1, in general, the amount allowed as a deduction under this section for any taxable year shall not exceed $12,500, $25,000 in the case of a joint return. 2, limitation based on adjusted gross income. A, in general, the amount allowable as a deduction under subsection A after application of paragraph 1 shall be reduced, but not below zero, by $100 for each $1,000 by which the taxpayer's modified adjusted gross income exceeds $150,000, $300,000 in the case of a joint return. B, modified adjusted gross income. For purposes of this paragraph, the term modified adjusted gross income means the adjusted gross income of the taxpayer for the taxable year increased by any amount excluded from gross income under Section 911, 931, or 933. C, qualified overtime compensation. 1, in general, for purposes of this section, the term qualified overtime compensation means overtime compensation paid to an individual required under Section 7 of the Fair Labor Standards Act of 1938 that is in excess of the regular rate as used in such section at which such individual is employed. 2, exclusions. Such term shall not include any qualified tip as defined in Section 224D. D, Social Security number required. 1, in general, no deduction shall be allowed under this section unless the taxpayer includes on the return of tax for the taxable year such individual's Social Security number. 2, Social Security number defined. For purposes of paragraph 1, the term Social Security number shall have the meaning given such term in Section 24H7. E, married individuals. If the taxpayer is a married individual within the meaning of Section 7703, this section shall apply only if the taxpayer and the taxpayer's spouse file a joint return for the taxable year. F, regulations. The Secretary shall issue such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this section, including regulations or other guidance to prevent abuse of the deduction allowed by this section. G, termination. No deduction shall be allowed under this section for any taxable year beginning after December 31, 2028. B, deduction allowed to non-itemizers. Section 63B, as amended by the preceding provisions of this Act, is amended by striking "and" at the end of paragraph 4, by striking the period at the end of paragraph 5 and inserting "and by adding at the end a following new paragraph. 6, the deduction provided in Section 225. C, reporting. 1, requirement to include overtime compensation on W-2. Section 6051A, as amended by the preceding provision of this Act, is amended by striking "and" at the end of paragraph 17, by striking the period at the end of paragraph 18 and inserting "and by inserting after paragraph 18 the following new paragraph. 19, the total amount of qualified overtime compensation as defined in Section 225C. 2, payments to persons not treated as employees under tax laws. A, statement furnished to Secretary. Section 6041A, as amended by Section 70201E1A, is amended by inserting and a separate accounting of any amount of qualified overtime compensation as defined in Section 225C after occupation of the person receiving such tips. B, statement furnished to payee. Section 6041D, as amended by Section 70201E1B, is amended by striking "and" at the end of paragraph 2, by striking the period at the end of paragraph 3, and inserting "and by inserting after paragraph 3 the following new paragraph. 4, the portion of payments that are qualified overtime compensation as defined in Section 225C. Omission of correct Social Security number treated as mathematical or clerical error. Section 6213G2, as amended by the preceding provisions of this Act, is amended by striking "and" at the end of subparagraph X, by striking the period at the end of subparagraph Y, and inserting "and by inserting after subparagraph Y the following new subparagraph. Z, an omission of a correct Social Security number required under Section 225D relating to deduction for qualified overtime. E, clerical amendment. The table of sections for Part 7 of Subchapter B of Chapter 1, as amended by the preceding provisions of this Act, is amended by redesignating the item relating to Section 225 as an item relating to Section 226, and by inserting after the item relating to Section 224 the following new item. Section 225, qualified overtime compensation. F, withholding. The Secretary of the Treasury or the Secretary's delegate shall modify the procedures prescribed under Section 3402A of the Internal Revenue Code of 1986 for taxable years beginning after December 31st, 2025, to take into account the deduction allowed under Section 225 of such code as added by this Act. G, effective date. The amendments made by this section shall apply to taxable years beginning after December 31, 2024. H, transition rule. In the case of qualified overtime compensation required to be reported for periods before January 1, 2026, persons required to file returns or statements under Section 6051A19, 6041A, or 6041D4 of the Internal Revenue Code of 1986, as amended by this section, may approximate a separate accounting of amounts designated as qualified overtime compensation by any reasonable method specified by the Secretary. Section 70203, no tax on car loan interest. A, in general, Section 163H is amended by redesignating paragraph 4 as paragraph 5 and by inserting after paragraph 3 the following new paragraph. 4, special rules for taxable years 2025 through 2028 relating to qualified passenger vehicle loan interest. A, in general, in the case of taxable years beginning after December 31, 2024 and before January 1, 2029, for purposes of this subsection, the term personal interest shall not include qualified passenger vehicle loan interest. B, qualified passenger vehicle loan interest defined. 1, in general, for purposes of this paragraph, the term qualified passenger vehicle loan interest means any interest which is paid or accrued during the taxable year on indebtedness incurred by the taxpayer after December 31, 2024 for the purchase of and that is secured by a first lien on an applicable passenger vehicle for personal use. 2, exceptions. Such term shall not include any amount paid or incurred on any of the following. 1, a loan to finance fleet sales. 2, a loan incurred for the purchase of a commercial vehicle that is not used for personal purposes. 3, any lease financing. 4, a loan to finance the purchase of a vehicle with a salvage title. 5, a loan to finance the purchase of a vehicle intended to be used for scrap or parts. 3, VIN requirement. Interest shall not be treated as qualified passenger vehicle loan interest under this paragraph unless the taxpayer includes the vehicle identification number of the applicable passenger vehicle described in Clause 1 of the return of tax for the taxable year. C, limitations. 1, dollar amount. The amount of interest taken into account by a taxpayer under subparagraph B for any taxable year shall not exceed $10,000. 2, limitation based on modified adjusted gross income. 1, in general, the amount which is otherwise allowable as a deduction under subsection A is qualified passenger vehicle loan interest determined without regard to this clause and after the application of Clause 1 shall be reduced, but not below zero, by $200 for each $1,000 or portion thereof, by which the modified adjusted gross income of the taxpayer for the taxable year exceeds $100,000, $200,000 in the case of a joint return. 2, modified adjusted gross income. For purposes of this clause, the term modified adjusted gross income means the adjusted gross income of the taxpayer for the taxable year increased by any amount excluded from gross income under section 911, 931, or 933. D, applicable passenger vehicle. The term applicable passenger vehicle means any vehicle, 1, the original use of which commences with the taxpayer, 2, which is manufactured primarily for use on public streets, roads, and highways, not including a vehicle operated exclusively on a rail or rails. 3, which has at least 2 wheels. 4, which is a car, minivan, sport utility vehicle, pickup truck, or motorcycle. 5, which is treated as a motorcycle for purposes of Title II of the Clean Air Act. And 6, which has a gross vehicle weight rating of less than 14,000 pounds. Such term shall not include any vehicle, the final assembly of which did not occur within the United States. E, other definitions and special rules. For purposes of this paragraph, 1, final assembly. For purposes of subparagraph D, the term final assembly means the process by which a manufacturer produces a vehicle at or through the use of a plant, factory, or other place from which the vehicle is delivered to a dealer with all component parts necessary for the mechanical operation of the vehicle included with the vehicle, whether or not the component parts are permanently installed in or on the vehicle. 2, treatment of refinancing. Indebtedness described in subparagraph B shall include indebtedness that results from refinancing any indebtedness described in such subparagraph and that is secured by a first lien on the applicable passenger vehicle with respect to which the refinanced indebtedness was incurred, but only to the extent the amount of such resulting indebtedness does not exceed the amount of such refinanced indebtedness. 3, related parties. Indebtedness described in subparagraph B shall not include any indebtedness owed to a person who is related within the meaning of section 267B or 707B1 to the taxpayer. B, deduction allowed to non-itemizers. Section 63B, as amended by the preceding provisions of this act, is amended by striking "and" at the end of paragraph 5, by striking the period at the end of paragraph 6, and inserting and by adding at the end the following new paragraph. 7, so much of the deduction allowed by section 163A as is attributable to the exception under section 163H4A. C, reporting. 1, in general, subpart B of part 3 of subchapter A of chapter 61 is amended by adding at the end the following new section.
Section 6050AA, returns relating to applicable passenger vehicle loan interest received in trade or business from individuals. A, in general, any person, 1, who is engaged in a trade or business, and 2, who, in the course of such trade or business, receives from any individual interest aggregating $600 or more for any calendar year on a specified passenger vehicle loan, shall make the return described in subsection B with respect to each individual from whom such interest was received at such time as the Secretary may provide. B, form and manner of returns. A return is described in this subsection if such return 1 is in such form as the Secretary may prescribe, and 2 contains A, the name and address of the individual from whom the interest described in subsection A2 was received, B, the amount of such interest received for the calendar year, C, the amount of outstanding principal on the specified passenger vehicle loan as of the beginning of such calendar year, D, the date of the origination of such loan, E, the year, make, model, and vehicle identification number of the applicable passenger vehicle which secures such loan, or such other description of such vehicle as the Secretary may prescribe, and F, such other information as the Secretary may prescribe. C, statements to be furnished to individuals with respect to whom information is required. Every person required to make a return under subsection A shall furnish to each individual whose name is required to be set forth in such a return a written statement shown. 1, the name, address, and phone number of the information contact of the person required to make such return, and 2, the information described in some paragraphs B, C, D, and E of subsection B2 with respect to such individual and such information as is described in subsection B2F with respect to such individual as the Secretary may provide for purposes of this subsection. The written statement required under the preceding sentence shall be furnished on or before January 31st of the year following the calendar year for which the return under subsection A was required to be made. D, definitions for purposes of this section. 1, in general terms, terms used in this section, which are also used in paragraph 4 of section 163H, shall have the same meaning as when used in such paragraph. 2, specified passenger vehicle loan. The term specified passenger vehicle loan means the indebtedness described in section 163H4B with respect to any applicable passenger vehicle. E, regulations. The Secretary shall issue such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this section, including regulations or other guidance to prevent the duplicate reporting of information under this section. F, applicability. No return shall be required under this section for any period to which section 163H4 does not apply. To penalties, section 6724D is amended. A, in paragraph 1B by striking or at the end of the clause XXVII, by striking and at the end of clause XXVII, and inserting or and by adding at the end of the following new clause. 29, section 6050A. Relating to returns relating to applicable passenger vehicle loan interest received in trade or business from individuals, and B, in paragraph 2 by striking or at the end of subparagraph KK, by striking the period at the end of subparagraph LL, and inserting or and by inserting after subparagraph LL the following new paragraph MM. Section 6050 AAC, relating to statements relating to applicable passenger vehicle loan interest received in trade or business from individuals. D, conforming amendments. 1, section 56E1B is amended by striking section 163H4 and inserting section 163H5. 2, the table of sections for subpart B of part 3 of chapter A of chapter 61 is amended by adding at the end of the following new item, section 6050AA, returns relating to applicable passenger vehicle loan interest received in trade or business from individuals. E, effective date. The amendments made by this section shall apply to indebtedness incurred after December 31st, 2024. Section 70204, Trump Accounts and Contribution Pilot Program. A, Trump Accounts 1 in general, subchapter F of Title 1 is amended by adding at the end the following new part, Part 9, Trump Accounts, Section 530A, Trump Accounts, Section 530A, Trump Accounts. A, General Rule. Except as provided in this section or under regulations or guidance established by the Secretary, a Trump account shall be treated for purposes of this title in the same manner as an individual retirement account under Section 408A. B, Trump account for purposes of this section. 1, in general, the term Trump account means an individual retirement account is defined in Section 408A, which is not designated as a Roth IRA and which meets the following requirements. A, the account I is created or organized by the Secretary for the exclusive benefit of an eligible individual or such eligible individual's beneficiaries, or 2, is 1, created or organized in the United States for the exclusive benefit of an individual who has not attained the age of 18 before the end of the calendar year or such individual's beneficiaries, and 2, funded by a qualified rollover contribution. B, the amount is designated in such manner as the Secretary shall prescribe at the time of the establishment of the account as a Trump account. C, the written governing instrument creating the account meets the following requirements. 1, no contribution will be accepted, 1, before the date that is 12 months after the date of the enactment of this section, or 2, in the case of a contribution made in any calendar year before the calendar year in which the account beneficiary attains age 18, if such contribution would result in aggregate contributions other than exempt contributions for such calendar year in excess of the contribution limit specified in subsection C2A. 2, except as provided in subsection D, no distribution will be allowed before the first day of the calendar year in which the account beneficiary attains age 18. 3, no part of the account funds will be invested in any asset other than an eligible investment during any period before the first day of the calendar year in which the account beneficiary attains age 18. 2, eligible individual. The term eligible individual means any individual, A, who has not attained the age of 18 before the close of the calendar year in which the election under subparagraph C is made. B, for whom a Social Security number within the meaning of Section 24H7 has been issued before the date on which an election under subsection C is made. And C, for whom, 1, an election is made under the subparagraph by the Secretary if the Secretary determines, based on information available to the Secretary from tax returns or otherwise, that such individual meets the requirements of subparagraphs A and B, and no prior election has been made for such individual under Clause 2, or 2, an election is made under this subparagraph by a person other than the Secretary at such time in such a manner as the Secretary may prescribe for the establishment of the Trump account if no prior election has been made for such individual under Clause 1. 3, eligible investment. A, in general, the term eligible investment means any mutual fund or exchange-traded fund which, 1, tracks the returns of a qualified index, 2, does not use leverage, 3, does not have annual fees and expenses of more than 0.1% of the balance of the investment in the fund, and 4, meets such other criteria as the Secretary determines appropriate for purposes of the Section B qualified index. The term qualified index means 1, the Standard & Poor's 500 stock market index, or 2, any other index. 1, which is comprised of equity investments in United States companies, and 2, for which regulated futures contracts as defined in Section 1256G1 are traded on a qualified board or exchange as defined in Section 1256G7. Such terms shall not include any industry or sector-specific index, but may include an index based on market capitalization. 4, account beneficiary. The term account beneficiary means the individual on whose behalf the Trump account was established. C, treatment of contributions. 1, no deduction allowed. No deduction shall be allowed under Section 219 for any contribution which is made before the first day of the calendar year in which the account beneficiary attains age 18. 2, contribution limit. In the case of any contribution made before the calendar year in which the account beneficiary attains age 18. A, in general, the aggregate amount of contributions other than exempt contributions for such calendar year shall not exceed $5,000. B, exempt contribution. For purposes of this paragraph, the term exempt contribution means 1, a qualified rollover contribution, 2, any qualified general contribution, or 3, any contribution provided under Section 6434. C, cost of living adjustment. 1, in general, in the case of any calendar year after 2027, the $5,000 amount under subparagraph A shall be increased by an amount equal to 1, such dollar amount multiplied by 2, the cost of living adjustment determined under Section 1F3 for the calendar year determined by substituting calendar year 2026 for calendar year 2016 in subparagraph A2 thereof. 2, rounding. If any increase under this subparagraph is not a multiple of 100, such amount shall be rounded to the next lower multiple of 100. 3, timing of contributions. Section 219F3 shall not apply to any contribution made to a Trump account for any taxable year ending before the calendar year in which the account beneficiary attains age 18. D, distributions. 1, in general, except as otherwise provided in the subsection, no distribution shall be allowed before the first day of the calendar year in which the account beneficiary attains age 18. 2, tax treatment of allowable distributions. For purposes of applying Section 72 to any amount distributed from a Trump account, the investment in the contract shall not include A, any qualified general contribution, B, any contribution provided under Section 6434, and C, the amount of any contribution which is excluded from the gross income under Section 128. 3, qualified rollover contributions. Paragraph 1 shall not apply to any distribution which is a qualified rollover contribution, and the amount of such distribution shall not be included in the gross income of the beneficiary. 4, qualified able rollover contributions. A, in general, paragraph 1 shall not apply to any distribution which is a qualified able rollover contribution, and the amount of such distribution shall not be included in the gross income of the beneficiary. B, qualified able rollover contribution. For purposes of this section, the term qualified able rollover contribution means an amount which is paid during the calendar year in which the account beneficiary attains age 17 and a direct trustee-to-trustee transfer from a Trump account maintained for the benefit of the account beneficiary to an able account as defined in Section 529 AE6 for the benefit of such account beneficiary, but only if the amount of such payment is equal to the entire balance of the Trump account from which the payment is made. 5, distributions of excess contributions. In the case of any contribution which is made before the calendar year in which the account beneficiary attains age 18 and which is in excess of the limitation in effect under subsection C2A for the calendar year. A, paragraph 1 shall not apply to the distribution of such excess. B, the amount of such distribution shall not be included in gross income of the account beneficiary. And C, the tax imposed by this chapter on the distributee for the taxable year in which the distribution is made shall be increased by 100% of the amount of net income attributable to such excess determined without regard to subparagraph B. 6, treatment of death of account beneficiary. If, by reason of the death of the account beneficiary before the first day of the calendar year in which the account beneficiary attains age 18, any person acquires the account beneficiary's interest in the Trump account, A, paragraph 1 shall not apply. B, such account shall cease to be a Trump account as of the date of death. And C, an amount equal to the fair market value of the assets reduced by the investment in the contract in such account on such date shall, 1, if such person is not the estate of such beneficiary, be includable in such person's gross income for the taxable year, which includes such date, or 2, if such person is the estate of such beneficiary, be includable in such beneficiary's gross income for the last taxable year of such beneficiary. E, qualified rollover contribution. For purposes of this section, the term qualified rollover contribution means an amount which is paid in a direct trustee-to-trustee transfer from a Trump account maintained for the benefit of the account beneficiary to a Trump account maintained for such beneficiary, but only if the amount of such payment is equal to the entire balance of the Trump account from which the payment is made. F, qualified general contribution. For purposes of this section, 1, in general, the term qualified general contribution means any contribution which A, is made by the Secretary pursuant to a general funding contribution, B, is made to the Trump account of an account beneficiary in the qualified class of account beneficiary specified in the general funding contribution, and C, is in an amount which is equal to the ratio of 1, the amount of such general funding contribution, to 2, the number of account beneficiaries in such qualified class. 2, general funding contribution. The term general funding contribution means a contribution which A is made by 1, an entity described in section 170C1 other than a possession of the United States or a political subdivision thereof or an Indian tribal government, or 2, an organization described in section 501C3 and exempt from tax under section 501A, and B, which specifies a qualified class of account beneficiaries to whom such contribution is to be distributed. 3, qualified class. A, in general, the term qualified class means any of the following. 1, all account beneficiaries who have not attained the age of 18 before the close of the calendar year in which the contribution is made. 2, all account beneficiaries who have not attained the age of 18 before the close of the calendar year in which the contribution is made and who reside in one or more states or other qualified geographic areas specified by the terms of the general funding contribution. 3, all account beneficiaries who have not attained the age of 18 before the close of the calendar year in which the contribution is made and who were born in one or more calendar years specified by the terms of the general funding contribution. B, qualified geographic area. The term qualified geographic area means any geographic area in which not less than 5,000 account beneficiaries reside and which is designated by the Secretary as a qualified geographic area under the subparagraph. G, trustee selection. In the case of any Trump account created or organized by the Secretary shall take into account the following criteria in selecting the trustee. 1, the history of reliability and regulatory compliance of the trustee. 2, the customer service experience of the trustee. 3, the costs imposed by the trustee on the account or the account beneficiary. H, other special rules in coordination with individual retirement account rules. 1, in general, the rules of subsections K and P of section 40H shall not apply to a Trump account, and the rules of subsections D and I of section 40H shall not apply to a Trump account for any taxable year beginning before the calendar year in which the account beneficiary attains age 18. 2, custodial accounts. In the case of a Trump account, section 408H shall be applied by substituting a Trump account described in section 530AB1 for an individual retirement account described in subsection A. 3, contributions. In the case of any taxable year beginning before the first day of the calendar year in which the account beneficiary attains age 18, contribution to a Trump account shall not be taken into account in applying any contribution limit to any individual retirement plan other than a Trump account. 4, distributions. Section 408D2 shall be applied separately with respect to Trump accounts and other individual retirement plans. 5, excess contributions for purposes of applying section 4973B to a Trump account for any taxable year beginning before the first day of the calendar year in which the account beneficiary attains age 18. The term excess contributions means the sum of A, the amount by which the amount contributed to the account for the calendar year in which taxable year begins exceeds the amount permitted to be contributed to the account under subsection C2, and B, the amount determined under this paragraph for the preceding taxable year. For purposes of this paragraph, the excess contributions for a taxable year are reduced by the distributions to which subsection D5 applies that are made during the taxable year by the date prescribed by law, including extensions of time for filing the account beneficiary's return for the taxable year. 1, reports. 1, in general, the trustee of a Trump account shall make such reports regarding such account to the Secretary and to the beneficiary of the account at such time and in such a manner that as may be required by the Secretary. Such reports shall include information with respect to A, contributions including the amount and source of any contribution in excess of $25 made from a person other than the Secretary, the account beneficiary, or the parent or legal guardian of the account beneficiary. B, distributions including distributions which are qualified rollover contributions. C, the fair market value of the account. D, the investment in the contract with respect to such account. And E, such other matters as the Secretary may require. 2, qualified rollover contributions. Not later than 30 days after the date of any qualified rollover contribution, the trustee of the Trump account to which the contribution was made shall make a report to the Secretary. Such report shall include A, the name, address, and social security number of the account beneficiary. B, the name and address of such trustee. C, the account number. D, the routing number of the trustee. And E, such other information as the Secretary may require. 3, period of reporting. This subsection shall not apply to any period after the calendar year in which the beneficiary attains age 17. 2, qualified able rollover contributions exempt from able contribution limitation. A, in general, section 529AB2B is amended by inserting or received in a qualified able rollover contribution described in section 530AD4B after except as provided in the case of contributions under subsection C1C. B, prohibition on excess contributions. The second sentence of section 529AB6 is amended by inserting but do not include any contributions received in a qualified able rollover contribution described in section 530AD4B before the period at the end. C, conforming amendment. Section 4973H1 is amended by inserting or contributions received in a qualified able rollover contribution described in section 530AD4B after other than contributions under section 529AC1C. 3, failure to provide reports on Trump accounts. Section 6693A2 is amended by striking and at the end of paragraph E by striking the period at the end of subparagraph F and inserting and by inserting after subparagraph F the following new subparagraph G, section 530A1 relating to Trump accounts for clerical amendment. A, the table of parts for subchapter F of Chapter 1 is amended by adding at the end the following new item, Part 9, Trump accounts. B, employer contributions 1 in general. Part 3 of subchapter B of Chapter 1 is amended by inserting after Section 127 the following new section, Section 128, employer contributions to Trump accounts. A, in general, gross income of an employee does not include amounts paid by the employer as a contribution to the Trump account of such employee or of any dependent of such employee if the amounts are paid or incurred pursuant to a program which is described in subsection C. B, limitation 1, in general, the amount which may be excluded under subsection A with respect to any employee shall not exceed $2,500. 2, inflation adjustment. A, in general, in the case of any taxable year beginning after 2027, the $2,500 amount in paragraph 1 shall be increased by an amount equal to 1, such dollar amount multiplied by 2, the cost of living adjustment determined under Section 1F3 for such calendar year by substituting calendar year 2026 for calendar year 2016 in subparagraph A2 thereof. B, rounding, if any increase determined under subparagraph A is not a multiple of $100, such increase shall be rounded to the nearest multiple of $100. C, Trump account contribution program. For purposes of this section, a Trump account contribution program is a separate written plan of an employer for the exclusive benefit of his employees to provide contributions to the Trump accounts of such employees or dependents of such employees, which meets requirements similar to the requirements of paragraphs 2, 3, 6, 7, and 8 of Section 129D. 2, clerical amendment. The table of sections for Part 3 of Subchapter B of Chapter 1 is amended by inserting after the item relating to Section 127 the following new item, Section 128, employer contributions to Trump accounts. C, certain contributions excluded from gross income. 1, in general, Part 3 of Subchapter B of Chapter 1 is amended by inserting before Section 140 the following new item, Section 139J, certain contributions to Trump accounts. A, in general, gross income of an account beneficiary shall not include any qualified general contribution to a Trump account of the account beneficiary. B, definitions, any term used in this section which is used in Section 530A shall have the meaning given to such term under Section 530A. 2, clerical amendment. The table of sections for Part 3 of Subchapter B is amended by inserting before the item relating to Section 140 the following new item, Section 139J, certain contributions to Trump accounts. D, Trump accounts contribution pilot program. 1, in general, Subchapter B of Chapter 65 is amended by adding at the end the following new section, Section 6434, Trump accounts contribution pilot program. A, in general, in the case of an individual who makes an election under this section with respect to an eligible child of the individual, such eligible child shall be treated as making a payment against the tax imposed by subtitle A for the taxable year for which the election was made in an amount equal to $1,000. B, refund of payment. The amount treated as a payment under subsection A shall be paid by the Secretary to the Trump account with respect to which such eligible child is the account beneficiary. C, eligible child. For purposes of this section, the term eligible child means qualifying child as defined in Section 152C. 1, who was born after December 31st, 2024, and before January 1st, 2029. 2, with respect to whom no prior election has been made under this section by such individual or any other individual. 3, who is a United States citizen, and 4, at least one parent of whom was a United States citizen at the time of such qualifying child's birth. D, election. An election under this section shall be made at such time and in such manner as the Secretary shall provide. E, Social Security number required. 1, in general, this section shall not apply to any taxpayer unless such individual includes with the election made under this section A, such individual's Social Security number, and B, the Social Security number of the eligible child with respect to whom the election is made. 2, Social Security number defined. For purposes of paragraph 1, the term Social Security number shall have the meaning given such terms in Section 24H7 determined by substituting before the date of the election made under Section 6434 for before the due date of such return in subparagraph B thereof. F, exception from reduction or offset. Any payment made to any individual under this section shall not be 1, subject to reduction or offset pursuant to subsection C, D, E, or F of Section 6402 for any similar authority permitting offset, or 2, reduced or offset by other assessed federal taxes that would otherwise be subject to levy or collection. G, special rule regarding interest. The period determined under Section 6611. A, with respect to any payment under this section shall not begin before January 1st, 2028. H, mirror code possessions. In the case of any possession of the United States with a mirror code tax system as defined in Section 24K, this section shall not be treated as part of the income tax laws of the United States for purposes of determining the income tax law of such possession unless such possession elects to have this section be so treated. 1, definitions. For purposes of this section, the term Trump account and account beneficiary have the meaning given such terms in Section 530AB. 2, penalty for negligent claim or fraudulent claim. Part 1 of Subchapter A of Chapter 68 is amended by adding at the following new section, Section 6659, improper claim for Trump account contribution pilot program credit. A, in general. In the case of any individual who makes an election under Section 6434 with respect to an individual who is not an eligible child of the taxpayer, 1, if such election was made due to negligence or disregard of the rules or regulations, there shall be imposed a penalty of $500, or 2, if such election was made to fraud, there shall be imposed a penalty of $1,000. B, definitions. 1, eligible child. The term eligible child has the meaning given such term under Section 6434. 2, negligence, disregard. The term negligence and disregard have the same meaning as when such terms are used in Section 6662. 3, omission of correct Social Security number treated as mathematical or clerical error. Section 6213G2, as amended by the preceding provisions of this Act, is amended by striking and at the end of subparagraph Y, by striking the period at the end of subparagraph Z, and inserting and by inserting after subparagraph Z, the following new paragraph, AA, an omission of a correct Social Security number required under Section 6434E1 relating to the Trump Accounts Contribution Pilot Program. For confirming amendments. A, the table of sections for subchapter B of Chapter 65 is amended by adding at the end of the following new item, Section 6434, Trump Accounts Contribution Pilot Program. B, the table of sections for Part 1 of subchapter A of Chapter 68 is amended by inserting after the item relating to Section 6658 the following new item, Section 6659, improper claim for Trump Account Contribution Pilot Program credit. E, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. F, funding. In addition to amounts otherwise available, there is appropriated to the Department of Treasury out of any money in the Treasury not otherwise appropriated $410 million to remain available until September 30th, 2034 to carry out the amendments made by this section. Chapter 3, establishing certainty and competitiveness for American job creators. Subchapter A, permanent U.S. business tax reform and boosting domestic investment. Section 70301, full expensing for certain business property. A, made permanent. 1, in general. Section 168K2A is amended by adding and at the end of Clause 1 and striking and at the end of Clause 2 and inserting a period and by striking Clause 3. 2, property with longer production periods. Section 168K2B is amended. A, in Clause 1 by striking subclauses 2 and 3 and redesignating subclauses 4, 5, and 6 as subclauses 2, 3, and 4, respectively. And B, by striking Clause 2 and redesignating clauses 3 and 4 as clauses 2 and 3, respectively. 3, self-constructed property. Section 168K2E is amended by striking Clause 1 and redesignating clauses 2 and 3 as clauses 1 and 2, respectively. 4, certain plants. Section 168K5A is amended by striking planted before January 1st, 2027, or is grafted before such date to a plant that has already been planted in the matter preceding Clause 1 and inserting planted or grafted. 5, conforming amendments. A, Section 168K2A2 is amended by striking Clause 2 of subparagraph E and inserting Clause 1 of subparagraph E. B, Section 168K2C1 is amended by striking and subclauses 2 and 3 of subparagraph B1. C, Section 168K2C2 is amended by striking subparagraph B3 and inserting subparagraph B2. D, Section 460C6B is amended by striking which and all that follows through the period and inserting which has a recovery period of 7 years or less. B, 100% expensing. 1, in general, Section 168K is amended. A, in paragraph 1A by striking the applicable percentage and inserting 100%. And B, by striking paragraph 6 and 8. 2, certain plants. Section 168K5A1 is amended by striking the applicable percentage and inserting 100%. 3, transitional election of reduced percentage. Section 168K10 is amended by striking subparagraph A and by redesignating subparagraph B as subparagraph C and by inserting before subparagraph C as so redesignated the following new subparagraphs. A, in general, in the case of qualified property placed in service by the taxpayer during the first taxable year ending after January 19, 2025, the taxpayer elects to have this paragraph apply for such taxable year. Paragraph 1A shall be applied. 1, in the case of property which is not described in Clause 2 by substituting 40% for 100%, or 2, in the case of property which is described in subparagraph B or C of paragraph 2 by substituting 60% for 100%. B, specified plants. In the case of any specified plant planted or grafted by the taxpayer during the first taxable year ending after January 19, 2025, that the taxpayer elects to have this paragraph apply for such taxable year. Paragraph 5A1 shall be applied by substituting 40% for 100%. C, effective date. 1, in general, except as otherwise provided in this subsection, the amendments made by this section shall apply to property acquired after January 19, 2025. 2, specified plants, except as provided in paragraph 3, and in the case of any specified plant as defined in Section 168K5B of the Internal Revenue Code of 1986, as amended by this section. The amendments made by this section shall apply to such plants which are planted or grafted after January 19, 2025. 3, transitional election of reduced percentage. The amount made by subsection B3 shall apply to taxable years ending after January 19, 2025. 4, acquisition date determination for purposes of paragraph 1. Property shall not be treated as acquired after the date on which a written binding contract is entered into for such acquisition. Section 70302, full expensing of domestic research and experimental expenditures, A in general. Part 6 of subchapter B of Chapter 1 is amended by inserting after Section 174 the following new section. Section 174A, domestic research or experimental expenditures. A, treatment as expenses. Notwithstanding Section 263, there shall be allowed as a deduction any domestic research or experimental expenditures which are paid or incurred by the taxpayer during the taxable year. B, domestic research or experimental expenditures for purposes of this section. The term domestic research or experimental expenditures means research or experimental expenditures paid or incurred by the taxpayer in connection with the taxpayer's trade or business other than such expenditures which are attributable to foreign research within the meaning of Section 41D4F. C, amortization of certain domestic research or experimental expenditures in general at the election of the taxpayer made in accordance with regulations or guidance provided by the Secretary in the case of domestic research or experimental expenditures which would, but for subsection A, be chargeable to capital account but not chargeable to property of the character which is subject to the allowance under Section 167 relating to allowance for depreciation, etc., or Section 611 relating to allowance for depletion. Subsection A shall not apply, and the taxpayer shall A, charge such expenditures to capital account, and B, be allowed an amortization deduction of such expenditures ratably over such period of not less than 60 months as may be selected by the taxpayer, beginning with the month in which the taxpayer first realizes benefits from such expenditures. 2, time for and scope of election. The election provided by paragraph 1 may be made for any taxable year, but only if made not later than the time prescribed by law for filing the return for such taxable year, including extensions thereof. The method so elected and the period selected by the taxpayer shall be adhered to in computing taxable income for the taxable year for which the election is made, and for all subsequent taxable years, unless with the approval of the Secretary a change to a different method or to a different period is authorized with respect to part or all of such expenditures. The election shall not apply to any expenditure paid or incurred during any taxable year before the taxable year for which the taxpayer makes the election. D, special rules. 1, land and other property. This section shall not apply to any expenditure for the acquisition or improvement of land or for the acquisition or improvement of property to be used in connection with the research or experimentation and of a character which is subject to the allowance under Section 167 relating to allowance for depreciation, etc., or Section 611 relating to allowance for depletion, but for the purposes of this section, allowances under Section 167 and allowances under Section 611 shall be considered as expenditures. 2, expiration expenditures. This section shall not apply to any expenditure paid or incurred for the purpose of ascertaining the existence, location, extent, or quality of any deposit of ore or other mineral, including oil and gas. 3, software development. For purposes of this section, any amount paid or incurred in connection with the development of any software shall be treated as a research or experimental expenditure. B, coordination with certain other provisions. 1, foreign research expenses. Section 174 is amended. A in subsection A, 1, by striking a taxpayer's specified research or experimental expenditures and inserting a taxpayer's foreign research or experimental expenditures, and 2, by striking over the 5-year period, 15-year period in the case of any specified research or experimental expenditures which are attributable to foreign research within the meaning of Section 41D4F, then paragraph 2B, and inserting over the 15-year period. B in subsection B, 1, by striking specified research and inserting foreign research, 2, by inserting and which are attributable to foreign research within the meaning of Section 41D4F before the period at the end, and 3, by striking specified in the heading thereof and inserting foreign, and C in subsection D, 1, by striking specified research or experimental expenditures and inserting foreign research or experimental expenditures, and 2, by inserting or reduction to amount realized after no deduction.
Two, research credit. A, Section 41D1A is amended to read as follows. A, with respect to which expenditures are treated as domestic research or experimental expenditures under Section 174A. B, Section 280CE1 is amended to read as follows. 1, in general, the domestic research or experimental expenditures otherwise taken into account under Sections 174A shall be reduced by the amount of the credit allowed under Section 41A. 3, AMT adjustment. Section 56B2 is amended. A, in subparagraph A, 1, by striking or 174A in the matter preceding clause 1 and inserting 174A or 174AA, and 2, by striking research and experimental expenditures described in Section 174A in clause 2 thereof and inserting foreign research or experimental expenditures described in Section 174A and domestic research or experimental expenditures in Section 174AA, and B, in paragraph C by inserting or 174A after 174AA. 4, optional 10-year write-off. Section 59E2B is amended by striking Section 174A relating to research and experimental expenditures and inserting Section 174AA relating to domestic research or experimental expenditures. 5, qualified small issue bonds. Section 144A4C4 is amended by striking 174A and inserting 174AA. 6, startup expenditures. Section 195C1 is amended by striking or 174 in the last sentence and inserting 174 or 174A. 7, capital expenditures. A, Section 263A1B is amended by inserting or 174A after 174. B, Section 263A.C2 is amended by inserting or 174A after 174. 8, active business computer software royalties. Section 543D4A1 is amended by inserting 174A after 174. 9, source rules. Section 864G2 is amended, A, by striking research and experimental expenditures within the meaning of Section 174 in the first sentence and inserting foreign research or experimental expenditures within the meaning of Section 174, or domestic research or experimental expenditures within the meaning of Section 174, and B, in the last sentence, 1, by striking treated as deferred expenses under subsection B of Section 174 and inserting allowed as an amortization deduction under Section 174A or Section 174AC, and 2, by striking such subsection and inserting such section as the case may be. 10, basis adjustment. Section 1016A14 is amended by striking deductions as deferred expenses under Section 174B1 relating to research and experimental expenditures, and inserting deductions under Section 174 or 174AC. 11, small business stock. Section 1202E2B is amended by striking which may be treated as research and experimental expenditures under Section 174 and inserting which are treated as foreign research or experimental expenditures under Section 174 or domestic research or experimental expenditures under Section 174A. E, change in method or accounting. 1, in general, the amendments made by subsection A shall be treated as a change in method of accounting for purposes of Section 481 of the Internal Revenue Code of 1996, and A, such change shall be treated as initiated by the taxpayer. B, such change shall be treated as made with the consent of the Secretary, and C, such change shall be applied only on a cutoff basis for any domestic research or experimental expenditures as defined in Section 174AB of such code as added by this section, and determined by applying the rules of Section 174AD of such code, paid or incurred in taxable years beginning after December 31st, 2024, and no adjustments under Section 481A shall be made. 2, special rules. In the case of a taxable year which begins after December 31st, 2024, and ends before the date of the enactment of this Act, A, paragraph 1C shall not apply, and B, the change in method of accounting under paragraph 1 shall be applied on a modified cutoff basis, taking into account for purposes of Section 481A of such code only the domestic research or experimental expenditures as defined in Section 174AB of such code as added by the section, and determined by applying the rules of Section 174AD of such code, paid or incurred in such taxable year, but not allowed as a deduction in such taxable year. D, clerical amendment. The table of sections for Part 6 of Subchapter B of Chapter 1 is amended by inserting after the item relating to Section 174 the following new item. Section 174A, domestic research or experimental expenditures. C, effective date. 1, in general, except as otherwise provided in the subsection or subsection F1, the amendments made by this section shall apply to amounts paid or incurred in taxable years beginning after December 31st, 2024. 2, treatment of foreign research or experimental expenditures upon disposition. A, in general, the amendment by subsection B1, C2 shall apply to property disposed, retired, or abandoned after May 12th, 2025. B, no inference. The amendment made by subsection B1, C2 shall not be construed to create any inference with respect to the proper application of Section 174D of the Internal Revenue Code of 1996 with respect to taxable years beginning before May 13th, 2025. 3. Coordination with research credit. The amendment made by subsection B2B shall apply to taxable years beginning after December 31st, 2024. 4. No inference with respect to coordination with research credit for prior periods. The amendment made by subsection B2B shall not be construed to create any inference with respect to the proper application of Section 280CE of the Internal Revenue Code of 1996 with respect to taxable years beginning before January 1st, 2025. F, transition rules. 1, election for retroactive application by certain small businesses. A, in general, at the election of an eligible taxpayer, paragraphs 1 and 3 of subsection E shall each be applied by substituting December 31st, 2021 for December 31st, 2024. An election made under this subparagraph shall be made in such manner as the Secretary may provide and not later than the date that is 1 year after the date of the enactment of this Act. The taxpayer shall file an amended return for each taxable year affected by such election. B, eligible taxpayer. For purposes of this paragraph, the term eligible taxpayer means any taxpayer other than the tax shelter prohibited from using the cash receipts and disbursements methods of accounting under Section 448A3, which meets the gross receipts test of Section 448E for the first taxable year beginning after December 31st, 2024. C, election treated as change in method of accounting. In the case of any taxpayer which elects the application of subparagraph A, 1, such election may be treated as a change in method of accounting for purposes of Section 41 of such code for the taxpayer's first taxable year affected by such election. 2, such change shall be treated as initiated by the taxpayer for such taxable year. 3, such change shall be treated as made with the consent of the Secretary. And 4, subsection C shall not apply to such taxpayer. D, election regarding coordination with research credit. An election under Section 280C E2 of the Internal Revenue Code of 1986, or revocation of such election for any taxable year beginning after December 31st, 2021, by an eligible taxpayer making an election under subparagraph A shall not fail to be treated as timely made or as made on the return if made during the 1-year period beginning on the date of the enactment of this Act on an amended return for such taxable year. 2, election to deduct certain unamortized amounts paid or incurred in taxable years beginning before January 1st, 2025. A, in general, in the case of any domestic research or experimental expenditures as defined in Section 174A as added by subsection A, which are paid or incurred in taxable years beginning after December 31st, 2021 and before January 1st, 2025, and which was charged to capital account, a taxpayer may elect 1, to deduct any remaining unamortized amount with respect to such expenditures in the first taxable year beginning after December 31st, 2024, or 2, to deduct such remaining unamortized amount with respect to such expenditures ratably over the 2 taxable year period beginning with the first taxable year beginning after December 31st, 2024. B, change the method of accounting. In the case of a taxpayer who makes an election under this paragraph, 1, such taxpayer shall be treated as initiating a change in method of accounting for purposes of Section 41 of the Internal Revenue Code of 1996 with respect to the expenditures to which the election applies. 2, such change shall be treated as made with the consent of the Secretary. And 3, such change shall be applied only on a cutoff basis for such expenditures. No adjustments under Section 41A shall be made. C, regulations. The Secretary of the Treasury or the Secretary's delegate shall publish such guidance or regulations as may be necessary to carry out the purposes of this paragraph, including regulations or guidance allowing for the deduction allowed under subparagraph A in the case of taxpayers with taxable years beginning after December 31st, 2024, and ending before the date of the enactment of this Act. Section 70303, modification of limitation on business interest. A, in general, Section 163J 8AV is amended by striking in the case of taxable years beginning before January 1st, 2025. B, floor plan financing applicable to certain trailers and campers. Section 163J9C is amended by adding at the end of the following new flush sentence, such terms shall also include any trailer or camper which is designed to provide temporary living quarters for recreational camping or seasonal use and is designed to be towed by or fixed to a motor vehicle. C, effective date and special rule. In general, the amendments made by this section shall apply to taxable years beginning after December 31st, 2024. 2, special rule for short taxable years. Secretary of the Treasury or the Secretary's delegate may prescribe such rules as are necessary or appropriate to provide for the application of the amendments made by this section in the case of any taxable year of less than 12 months that begins after December 31st, 2024, and ends before the date of the enactment of this Act. Section 70304, extension and enhancement of paid family and medical leave credit. A, in general, Section 45S is amended in subsection A, by striking paragraph 1 and inserting the following. 1, in general, for purposes of Section 38, in the case of an eligible employer, the paid family and medical leave credit is an amount equal to either of the following as elected by such employer. A, the applicable percentage of the amount of wages paid to qualifying employees with respect to any period in which such employees are on family and medical leave. B, if such employer has an insurance policy with regards to the provision of paid family and medical leave, which is in force during the taxable year, and the applicable percentage of the total amount of premiums paid or incurred by such employer during such taxable year with respect to such insurance policy, and B, by adding at the end of the following. 3, rate of payment determined without regard to whether leave is taken. For purposes of determining the applicable percentage with respect to paragraph 1B, the rate of payment under the insurance policy shall be determined without regard to whether any qualifying employees were on family and medical leave during the taxable year. 2, in subsection B1, by striking credit allowed and inserting wages taken into account. 3, in subsection C, by striking paragraphs 3 and 4 and inserting the following. 3, aggregation rule. A, in general, except as provided in subparagraph B, all persons which are treated as a single employer under subsections B and C of section 414 shall be treated as a single employer. B, exception 1, in general, subparagraph A shall not apply to any person who establishes to the satisfaction of the Secretary that such person has a substantial and legitimate business reason for failing to provide a written policy described in paragraph 1 or 2. 2, substantial and legitimate business reason. For purposes of Clause 1, the term substantial and legitimate business reason shall not include the operation of a separate line of business, the rate of wages or category of jobs for employees, or any similar basis, or the application of state or local laws relating to family and medical leave, but may include the grouping of employees of a common law employer. 4, treatment of benefits mandated or paid for by state or local governments. For purposes of this section, any leave which is paid by a state or local government is required by state or local law. A, except as provided in subparagraph B, shall be taken into account in determining the amount of paid family and medical leave provided to the employer, and B, shall not be taken into account in determining the amount of the paid family and medical leave credit under subsection A. 4, in subsection D, A in paragraph 1 by inserting, or at the election of the employer, for not less than 6 months after 1 year or more. B in paragraph 2 by inserting, as determined on an annualized basis, pro rata for part-time employees after compensation, and by striking the period at the end and inserting and by adding at the end of the following. 3, is customarily employed for not less than 20 hours per week, and 5, by striking subsection 1. B, no double benefit. Section 280CA is amended. 1, by striking 45SA and inserting 45SA1A, and 2, by inserting after the first sentence of the following. No deduction shall be allowed for that portion of the premiums paid or incurred for the taxable year which is equal to that portion of the paid family and medical leave credit which is determined for the taxable year under Section 45SA1B. C, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70305, exceptions from limitations on deduction for business meals. A, exception to denial of deduction for business meals. Section 274O, as added by Section 13304 of Public Law 11597, as amended by striking no deduction and inserting, except in the case of an expense described in subsection ES or N2C, no deduction. B, meals provided on certain fishing boats and at certain fish processing facilities not subject to 50% limitation. Section 274N2C of the Internal Revenue Code of 1986 is amended by striking "or" at the end of Clause 3 and by adding at the end of the following new clause. V, provided 1, on a fishing vessel, fish processing vessel, or fish tender vessel, as such terms are defined in Section 2101 of Title 46 U.S. Code, or 2, at a facility for the processing of fish for commercial use or consumption which AA is located in the United States north of 50 degrees north latitude, and BB is not located in a metropolitan statistical area within the meaning of Section 143K2B, or C, effective date. The amendments made by this section shall apply to amounts paid or incurred after December 31st, 2025. Section 70306, increased dollar limitations for expensing of certain depreciable business assets. A, in general, Section 179B is amended, 1 in paragraphs 1 by striking $1 million and inserting $2,500,000, and 2 in paragraph 2 by striking $2,500,000 and inserting $4 million. B, conforming amendments, Section 179B6A is amended, 1 by inserting 2025 in the case of the dollar amounts in paragraphs 1 and 2, after, in the case of any taxable year beginning after 2018, and 2 in Clause 2 by striking determined by substituting calendar year 2017 for calendar year 2016 in subparagraph A2 thereof, and inserting determined by substituting in paragraph A2 thereof. 1 in the case of amounts in paragraphs 1 and 2, calendar year 2024 for calendar year 2016, and 2 in the case of the amount of paragraph 5A, calendar year 2017 for calendar year 2016. C, effective date. The amendments made by this section shall apply to property placed in service in taxable years beginning after December 31st, 2024. Section 70307, special depreciation allowance for qualified production property. A, in general, Section 168 is amended by adding at the end of the following new subsection. N, special allowance for qualified production property. 1, in general, in the case of any qualified production property of a taxpayer making an election under this subsection, A, the depreciation deduction provided by Section 167A for the taxable year in which such property is placed in service shall include an allowance equal to 100% of the adjusted basis of the qualified production property, and B, the adjusted basis of the qualified production property shall be reduced by the amount of such deduction before computing the amount otherwise allowable as a depreciation deduction under this chapter for such taxable year and any subsequent taxable year. 2, qualified production property. For purposes of this subsection, A, in general, the term qualified production property means that the portion of any non-residential real property, 1, to which this section applies, and 2, which is used by the taxpayer as an integral part of a qualified production activity, 3, which is placed in the service of the United States or any possession of the United States, 4, the original use of which commences with the taxpayer, 5, the construction of which begins after January 19th, 2025, and before January 1st, 2029, 6, which is designated by the taxpayer in the election made under this subsection, and 7, which is placed in service before January 1st, 2031. For purposes of Clause 2, in the case of a property with respect to which the taxpayer is a lessor, property used by a lessee shall not be considered to be used by the taxpayer as part of a qualified production activity. B, special rule for certain property not previously used in qualified production activities. 1, in general, in the case of property acquired by the taxpayer during the period described in subparagraph AV, the requirements of clauses 4 and 5 of subparagraph A shall be treated as satisfied if 1, such property was not used in a qualified production activity, determined without regard by the second sentence of subparagraph D, by any person at any time during the period beginning on January 1st, 2021, and ending on May 12th, 2025. 2, such property was not used by the taxpayer at any time prior to such acquisition. And 3, the acquisition of such property meets the requirements of paragraphs 2A, 2B, 2C, and 3 of Section 179D. 2, written binding contracts. For purposes of determining under Clause 1 whether such property is acquired before the period described in subparagraph AV, such property shall be treated as acquired not later than the date on which the taxpayer enters into a written binding contract for such acquisition, And H, whether such property is acquired under such period, such property shall be treated as acquired not earlier than such date. C, exclusion of office space, etc. The term qualified production property shall not include that portion of any non-residential real property which is used for offices, administrative services, lodging, parking, sales activities, research activities, software development or engineering activities, or other functions unrelated to the manufacturing, production, or refining of tangible personal property. D, qualified production activity. The term qualified production activity means the manufacturing, production, or refining of a qualified product. The activities of any taxpayer do not constitute manufacturing, production, or refining of a qualified product unless the activities of such taxpayer result in a substantial transformation of the property comprising the product. E, production. The term production shall not include activities other than agricultural production and chemical production. F, qualified product. The term qualified product means any tangible personal property if such property is not a food or beverage prepared in the same building as a retail establishment in which such property is sold. G, syndication. For purposes of subparagraph A4, rules similar to the rules of subsection K2E3 shall apply. H, extension of placed in service date under certain circumstances. The Secretary may extend the date under subparagraph A7 with respect to any property that meets the requirements of clauses 1 through 6 of subparagraph A if the Secretary determines that an act of God, as defined in section 101(1) of the Comprehensive Environmental Response, Compensation, and Liability Act of 1980, prevents the taxpayer from placing such property in service before such date. 3, deduction allowed in computing minimum tax. For purposes of determining alternative minimum taxable income under Section 55, the deduction under Section 167 for qualified production property shall be determined under the section without regard to any adjustment under Section 56. 4, coordination with certain other provisions. A, other special depreciation allowances. For purposes of subsections K7, 1(3)D, and M2(B3), 1, qualified production property shall be treated as a separate class of property, and 2, the taxpayer shall be treated as having made an election under such subsections with respect to such class. B, alternative depreciation property. The term qualified production property shall not include any property to which the alternative depreciation system under subsection G applies. For purposes of subsection G7A, qualified production property to which this subsection applies shall be treated as separate non-residential real property. 5, recapture. If at any time during the 10-year period, beginning on the date that any qualified production property is placed in service by the taxpayer, such property ceases to be used as described in paragraph 2A2 and is used by the taxpayer in a productive use not described in paragraph 2A2, section 1245 shall be applied. 1, by treating such property as having been disposed of by the taxpayer as of the first time such property is so used in a productive use not described in paragraph 2A2, and 2, by treating the amount described in subparagraph B of section 1245A1 with respect to such disposition as being not less than the amount described in subparagraph A of such section, and B, the basis of the taxpayer in such property and the taxpayer's allowance for depreciation with respect to such property shall be appropriately adjusted to take into account amounts recognized by reason of subparagraph A. 6, election. A, in general, an election under the subsection for any taxable year shall 1, specify the non-residential real property subject to the election and the portion of such property designated under paragraph 2A6, and 2, except as otherwise provided by the Secretary, be made on the taxpayer's return of the tax imposed by this chapter for the taxable year. Such elections shall be made in such a manner as the Secretary may prescribe by regulations or other guidance. B, election. Any election made under this subsection and any specification contained in any such election may not be revoked except with the consent of the Secretary, and the Secretary shall provide such consent only in extraordinary circumstances. 7, regulations. The Secretary shall issue such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this subsection, including regulations or other guidance. A, providing rules regarding what constitutes substantial transformations of property which are consistent with guidance provided under Section 954D, and B, providing for the application of paragraph 5 with respect to a change in use described in such paragraph by transferee following a fully or partially tax-free transfer of qualified production property. B, treatment of qualified production property as Section 1245 property. Section 1245A3 is amended by striking or at the end of subparagraph E, by striking the period at the end of subparagraph F and inserting or, and by adding at the end of the following new subparagraph. G, any qualified production property as defined in Section 168N2. C, effective date. The amendments made by this section shall apply to property placed in service after the date of the enactment of this Act. Section 70308, enhancement of advanced manufacturing investment credit. A, in general, Section 48DA is amended by striking 25% and inserting 35%. B, effective date. The amendments made by this section shall apply to property placed in service after December 31st, 2025. Section 70309, spaceports are treated like airports under exempt facility bond rules. A, in general, Section 142A1 is amended to read as follows. 1. Airports and spaceports. B. Treatment of ground leases. Section 142B1 is amended by adding at the end of the following new subparagraph. C. Special rule for spaceport ground leases. For purposes of subparagraph A, spaceport property located on land leased by a governmental unit from the United States shall not fail to be treated as owned by a governmental unit if the requirements of this paragraph are met by the lease and any subleases of the property. C. Definition of spaceport. Section 142 is amended by adding at the end of the following new subsection. P. Spaceport. In general, for purposes of subsection A1, the term spaceport means any facility located or in use in close proximity to a launch site or re-entry site used for A, manufacturing, assembling, or repairing spacecraft, space cargo, or other facilities as described in this paragraph, or any component of the foregoing. B, flight control operations. C, providing launch services and re-entry services, or D, transferring crew, space flight participants, or space cargo to or from spacecraft. 2, additional terms. For purposes of paragraph 1, A, space cargo. The term space cargo includes satellites, scientific experiments, other property transported into space, and any other type of payload, whether or not such property returns from space. B, spacecraft. The term spacecraft means a launch vehicle or a re-entry vehicle. C, other terms. The terms launch site, crew, space flight participant, launch services, launch vehicle, payload, re-entry services, re-entry site. A re-entry vehicle shall have the respective meanings given to such terms by Section 50902 of Title 51 United States Code as in effect on the date of enactment of this subsection. 3. Public use requirement. Notwithstanding any other provision of law, a facility shall not be required to be available for use by the general public to be treated as a spaceport for purposes of this section. 4. Manufacturing facilities and industrial parks allowed. With respect to spaceports, subsection C2E shall not apply to spaceport property described in paragraph 1A. D. Exception from federally guaranteed bond prohibition. Section 149B3 is amended by adding at the end of the new paragraph, F, subsection exception for spaceports. A bond shall not be treated as federally guaranteed merely because of the payments of rent, user fees, or other charges by the United States, or any agency or instrumentality thereof, in exchange for the use of the spaceport by the United States, or any agency or instrumentality thereof. E, conforming amendment. The heading for Section 142E is amended by inserting spaceports after airports.
F, effective date. The amendments made by this section shall apply to obligations issued after the date of enactment of this act. Subchapter B, permanent America First International Trade Reforms, Part 1, Foreign Tax Credit, Section 70311, modifications related to foreign tax credit limitations. A, rules for allocation of certain deductions to foreign source net CFC tested income for purposes of foreign tax credit limitation. Section 904B is amended by adding at the end the following new paragraph. 5. Deductions treated as allocable to foreign source net CFC tested income solely for purposes of the application of subsection A with respect to amounts described in subsection D1A. The taxpayer's taxable income from sources without the United States shall be determined by allocating and apportioning A, any deduction allowed under section 250A1B, and any deduction allowed under section 164A3 for taxes imposed on amounts described in section 250A1B to such income. No amount of interest, expense, or research and experimental expenditures to such income, and C, any other deduction to such income only if such deduction is directly allocable to such income. Any amount or deduction which would, but for subparagraphs B and C, have been allocated or apportioned to such income shall only be allocated or apportioned to income which is from sources within the United States. B, other modifications. Section 904 D2H1 is amended by striking paragraph 1B and inserting paragraph 1D. 2, section 904 D4C2 is amended by striking paragraph 1A and inserting paragraph 1C. 3, section 951A F1A is amended by striking 904H1 and inserting 904H. Effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70312, modification to determination of deemed paid credit for taxes properly attributable to tested income. A, increase in deemed paid credit. 1, in general, section 960D1 is amended by striking 80% and inserting 90%. 2, gross up for deemed paid foreign tax credit. Section 78 is amended A by striking subsections A, B, and D and inserting subsections A and D, and B by striking 80% and inserting 90%. B, disallowance of foreign tax credit with respect to distributions of previously taxed net CFC tested income. Section 960D is amended by adding at the end of the following new paragraph. 4, disallowance of foreign tax credit with respect to distributions of previously taxed net CFC tested income. No credit shall be allowed under Section 901 for 10% of any foreign income tax paid or accrued or deemed paid under subsection B1 with respect to any amount excluded from gross income under Section 959A by reason of an inclusion in gross income under Section 951AA. C, effective dates. In general, the amendments made by subsection A shall apply to taxable years beginning after December 31st, 2025. Disallowance. The amendment made by subsection B shall apply to amounts distributed after June 28, 2025. Section 70313, sourcing certain income from the sale of inventory produced in the United States. A, in general, Section 904B, as amended by Section 70311, is amended by adding at the end the following new paragraph. 6, source rules for certain inventory produced in the United States and sold through foreign branches. For purposes of this section, if a United States person maintains an office or other fixed place of business in a foreign country, determined under rules similar to the rules of Section 864C5, the portion of income which A, is from the sale or exchange outside the United States of inventory property within the meaning of Section 86511, 1, which is produced in the United States, 2, which is for use outside the United States, 3, which is the third sentence of Section 863B applies, and B is attributable to determined under rules similar to the rules of Section 864C5 to such office or other fixed place of business shall be treated as from sources without the United States, except that the amount so treated shall not exceed 50% of the income from the sale or exchange of such inventory property. B, effective date. The amendment made by this section shall apply to taxable years beginning after December 31st, 2025. Part 2, foreign-derived deduction, eligible income, and net CFC tested income. Section 70321. Modification of deduction for foreign-derived deduction eligible income and net CFC tested income. A, in general, Section 250A is amended, 1, by striking 37.5% in paragraph 1A and inserting 33.34%. 2, by striking 50% in paragraph 1B and inserting 40%, and by striking paragraph 3, B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 3070322, determination of deduction eligibility income. A, sales or other disposition of certain property. 1, in general, Section 250B3A1 is amended by striking and at the end of the subclause 5 and by striking over at the end of subclause 6 and inserting and C by adding at the end of the following new subclause 7, except as otherwise provided by the Secretary, any income and gain from the sale or other disposition, including pursuant to a transaction subject to Section 367D of AA, intangible property as defined in Section 367D4, and BB, any property of a type that is subject to depreciation, amortization, or depletion by the seller over. 2, conforming amendment, Section 250B5E, as amended by inserting other than paragraph 3A17 for purposes of this subsection. 3, effective date. The amendments made by this subsection shall apply to the sale or other dispositions, including pursuant to a transaction subject to Section 367D of the Internal Revenue Code of 1986, occurring after June 16, 2025. B, expense apportion limited to properly allocable expenses. 1, in general, Section 250B3A2 is amended to read as follows. 2, expenses and deductions, including taxes other than interest expenses and research or experimental expenditures properly allocable to such gross income. 2, effective date. The amendment made by this subsection shall apply to taxable years beginning after December 31st, 2025. Section 70323, rules related to deemed intangible income. A, taxation of net CFC tested income. 1, in general, Section 951AA is amended by striking global intangible low taxed income and inserting net CFC tested income. 2, repeal of tax-free deemed return on foreign investment, Section 951A, as amended by the preceding provisions of this Act, as amended by striking subsections B and D and redesignating subsections C, E, and F as subsections A, B, and D, respectively. 3, conforming amendments. A1, Section 250 is amended by striking global intangible low taxed income. Each place it appears in subsection A1, B1, A2, and B3, A1, 2, and inserting net CFC tested income. 2, the heading for Section 250 of such code is amended by striking global intangible low taxed income and inserting net CFC tested income. 3, the item relating to Section 250 in the table of section for Part 7 of Subchapter B, Chapter 1 of such code is amended by striking global intangible low taxed income and inserting net CFC tested income. B, Section 951A C1, as redesignated by paragraph 2, is amended by striking subsection B, C1A, and C1B, and inserting subsection B1A and B1B. C, Section 951A-D, as redesignated by paragraph 2, is amended, 1, by striking global intangible low income each place it appears and inserting net CFC tested income, and 2, by striking subsection C1A in paragraph 2B2 and inserting subsection B1A. D, Section 960D2 is amended, 1, by striking global intangible low taxed income and subparagraph A and inserting net CFC tested income, and 2, by striking Section 951A C1A and subparagraph B and inserting Section 951A B1A. E1, the heading for Section 951A is amended by striking global intangible low tax income and inserting net CFC tested income. 2, the item relating to Section 951A in the table of sections for Subpart F of Part 3 and Subchapter N of Chapter 2, or 1, is amended by striking global intangible low tax income and inserting net CFC tested income. Deductions for foreign-derived deduction eligible income. 1, in general, Section 250A1A is amended by striking foreign-derived intangible income and inserting foreign-derived deduction eligible income. 2, conforming amendment. Section 250A2 is amended by striking foreign-derived intangible income each place it appears and inserting foreign-derived deduction eligible income. B, Section 250B as amended by subsection A is amended. 1, by striking paragraphs 1 and 2. 2, by redesignating paragraphs 4 and 5 as paragraphs 1 and 2 respectively, and by moving such paragraphs before paragraph 3. 3, in paragraph 2B2, as so redesignated by striking paragraph 4B and inserting paragraph 1B, and 4, by striking intangible in the heading thereof and inserting deduction eligible. C1, the heading for Section 250 is amended by striking intangible in the heading thereof and inserting deduction eligible. 2, the heading for Section 172D9 is amended by striking intangible and inserting deduction eligible. 3, the item relating to Section 250 in the table of section for Part 8 of Subchapter B, Chapter 1 is amended by striking intangible and inserting deduction eligible. C, effective date. The amendment made by this section shall apply to taxable years beginning after December 31st, 2025. Part 3, base erosion minimum tax, Section 70331. Extension and modification of base erosion minimum tax. A, in general, Section 59AB is amended. 1, by striking 10% in paragraphs 1 and inserting 10.5%. And 2, by striking paragraph 2 and redesignating paragraphs 3 and 4 as paragraphs 2 and 3 respectively. B, conforming amendments. 1, Section 59AB1 is amended by striking except as provided in paragraphs 2 and 3 and inserting except as provided in paragraphs 2. 2, Section 59AB2 as redesignated by subsection A2 is amended by striking the percentage otherwise in effect under paragraph 1A and 2A shall each be increased, and inserting the percentages otherwise in effect under paragraph 1A shall be increased. 3, sections 59E1C is amended by striking in the case of the taxpayer described in subsection B3B and inserting in the case of the taxpayer described in subsection B2B. C, other modifications. In section 59A B2B2, as redesignated by subsection A2, is amended by striking registered securities dealer and inserting securities dealer registered. 2, section 59H2B is amended by striking section 603BB2 and inserting section 6038AB2. 3, section 59A12 is amended. A, by striking subsection G and inserting subsection H, and B, by striking subsection G3 and inserting subsection H3. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Part 4, business interest limitation. Section 70341, coordination of business interest limitation with interest capitalization provisions. A, in general, section 163J is amended by redesignating paragraphs 10 and 11 as paragraphs 11 and 12, and by inserting after paragraph 9 the following. 10, coordination with interest capitalization provisions. A, in general, in applying this subsection. 1, the limitation under paragraph 1 shall apply to business interest without regard to whether the taxpayer would otherwise deduct such business interest or capitalize such business interest under an interest capitalization provision. And 2, any reference in this subsection to a deduction for a business interest shall be treated as including a reference to the capitalization of business interest. B, amount allowed applied first to be capitalized interest. The amount allowed after taking into account the limitation described in paragraph 1 shall be applied first to the aggregate amount of business interest which would otherwise be capitalized, and 2, the remainder of any shall be applied to the aggregate amount of business interest which would be deducted. C, treatment of disallowed interest carried forward. No portion of any business interest carried forward under paragraph 2 from any taxable year to any succeeding taxable year for purposes of this title, including any interest capitalization provisions which previously applied to such portion, to be treated as interest to which an interest capitalization provision applies. D, interest capitalization provision. For purposes of this section, the term interest capitalization provision means any provision of this subtitle under which interest, 1, is required to be charged to capital account, or 2, may be deducted or charged to capital account. B, certain capitalized interest not treated as business interest. Section 163J5 is amended by adding at the end the following new sentence. Such terms shall not be included in any interest which is capitalized under Section 263G or 263AF. C, regulatory authority, Section 163J, as amended by subsection A, is amended by redesignating paragraphs 11 and 12 as paragraphs 12 and 13, and by inserting after paragraph 10 the following. 1. Regulatory authority. The Secretary shall issue such regulations or guidance as may be necessary or appropriate to carry out the purposes of this subsection, including regulations or guidance to determine which business interest is taken into account under this subsection and Section 59AC3. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70342. Definition of adjusted taxable income for business interest limitations. A, in general, subparagraph A of Section 163J8 is amended. 1, by striking and at the end of the clause 4, and 2, by adding at the end the following new clause. 6, the amounts included in gross income under sections 951A, 951AA, and 78, and the portion of the deductions allowed under sections 245AA by reason of section 964E4 and 250A1B by reason of such inclusion, and B, effective date. The amendments made by this section shall be applied to taxable years beginning after December 31st, 2025. Part 5, Other International Tax Reforms, Section 70351. Permanent extension of look-through rule for related controlled foreign corporations. A, in general, Section 954C6C is amended by striking and before January 1st, 2026. B, effective date. The amendment made by this section shall apply to taxable years of foreign corporations beginning after December 31st, 2025. Section 70352, repeal of election for 1 month deferral in determination of taxable year of specified foreign corporations. A, in general, Section 898C is amended by striking paragraph 2 and redesignating paragraph 3 as paragraph 2. B, effective date. The amendment made by this section shall apply to taxable years of specific foreign corporations beginning after November 30th, 2025. C, transition rule. 1, in general, in the case of the corporation that is a specific foreign corporation as of November 30th, 2025, such corporation's first taxable year beginning after such date shall end in the same time as the first required year within the meaning of Section 898C1 of the Internal Revenue Code of 1986. Ending after such date, if any specified foreign corporation is required by the amendments made by this section to change its taxable year for its first taxable year beginning after November 30th, 2025, A, such change shall be treated as initiated by such corporation. B, such change shall be treated as having been made with the consent of the Secretary, and C, the Secretary shall issue regulations or other guidance for allocating foreign taxes that are paid or accrued in such first taxable year and the succeeding taxable year among such taxable years in the manner the Secretary determines appropriate to carry out the purposes of this section. 2, Secretary. For the purposes of this subsection, the term Secretary means the Secretary of the Treasury or the Secretary's delegate. Section 70353, restoration of limitations on downward attribution of stock ownership and applying constructive ownership rules. A, in general, Section 958B as amended, 1, by inserting after paragraph 3 the following 4 subparagraphs A, B, and C of Section 318A shall not be applied so as to consider a United States person as owning stock which is owned by a person who is not a United States person, and 2, by striking paragraph 1 in the last sentence and inserting paragraphs 1 and 4. B, foreign-controlled United States shareholders, subpart F of Part 3, subchapter N of Chapter 1 is amended by inserting after Section 951A the following new section, Section 951B. Amounts included in gross income of foreign-controlled United States shareholders. A, in general, in the case of any foreign-controlled United States shareholder of a foreign-controlled foreign corporation, 1, this subpart other than Section 951A, 951B, and 957 shall be applied with respect to each shareholder, to such shareholder, separately from and in addition to the application of this subpart without regard to this section. A, by substituting foreign-controlled United States shareholder for United States shareholder, each place it appears therein, and B, by substituting foreign-controlled foreign corporation for controlled foreign corporation, each place it appears therein, and 2, Section 951A and such other provisions of this subpart as provided by the Secretary shall be applied with respect to such shareholder. A, by treating each reference to United States shareholder in such section as including a reference to such shareholder, and B, by treating each reference to controlled foreign corporation in such section as including a reference to such foreign-controlled foreign corporations. B, foreign-controlled United States shareholder. For purposes of this section, the term foreign-controlled United States shareholder means with respect to any foreign corporation, any United States person which would be a United States shareholder with respect to such foreign corporation. If 1, Section 951B were applied to substituting more than 50% for 10% or more, and 2, Section 958B were applied without regard to paragraph 4 thereof. C, foreign-controlled foreign corporation. For purposes of this section, the term foreign-controlled foreign corporation means a foreign corporation other than a controlled foreign corporation, which would be a controlled foreign corporation if Section 957A were applied. 1, by substituting foreign-controlled United States shareholder for United States shareholders, and 2, by substituting Section 958B other than paragraph 4 thereof for Section 958B. D, regulations. The Secretary shall prescribe such regulations or other guidance as may be necessary or appropriate to carry out the purpose of this section, including regulations or other guidance. 1, to treat a foreign-controlled United States shareholder or a foreign-controlled foreign corporation as a United States shareholder or as a controlled foreign corporation, respectively, for purposes of provisions of this title other than this subpart, including any reporting requirements, and 2, with respect to the treatment of foreign-controlled foreign corporations that are passive foreign investment companies as defined in Section 921-97. C, clerical amendment. The table of sections for subpart F of Part 3 of subchapter N of Chapter 1 is amended by inserting after the item relating to Section 951 the following new item, C951B, amounts included in the gross income of foreign-controlled United States shareholders. D, effective date. The amendments made by this section shall apply to taxable years of foreign corporations beginning December 31st, 2025. E, special rule. 1, in general, except to the extent provided by the Secretary of the Treasury or the Secretary's delegate, the effective date of any amendment to the Internal Revenue Code of 1986 shall be applied by treating references to United States shareholders as references to foreign-controlled United States shareholders, and by treating references to controlled foreign corporations as references to foreign-controlled foreign corporations. 2, definitions. Any term used in this paragraph 1, which is used in subpart F of Part 3 of subchapter N of Chapter 1 of the Internal Revenue Code of 1986, as amended by this section, shall have the meaning given such term in such subpart. F, no inference. The amendments made by this section shall not be construed to create any inference with respect to the proper application of any provision of the Internal Revenue Code of 1986 with respect to taxable years beginning before the taxable years to which such amendments apply. Section 70354, modification to pro rata share rules. In general, subsection A of section 951 is amended to read as follows. A, amounts included. 1, in general, if a foreign corporation is a controlled foreign corporation at any time during a taxable year of a foreign corporation in this subsection referred to as the CFC year, A, each United States shareholder which owns within the meaning of section 958A stock in such corporation or on any day during the CFC year shall include in gross income such shareholders' pro rata share determined under paragraph 2 of the corporation subpart F income for the CFC year, and B, each United States shareholder which owns within the meaning of section 958A stock in such corporation on the last day in the CFC year on which such corporation is controlled foreign corporation shall include in gross income the amount determined under section 956 with respect to such shareholder for the CFC year, but only to the extent not excluded from gross income under section 959A2. 2, pro rata share of subpart F in income. A United States shareholder's pro rata share of a controlled foreign corporation subpart F income for a CFC year shall be the portion of such income which is attributable to A, the stock of such corporation owned within the meaning of section 958A by such shareholder, and B, any period of the CFC year during which 1, such shareholder owned within the meaning of section 958A such stock, 2, such shareholder was a United States shareholder of such corporation, and 3, such corporation was a controlled foreign corporation. 3, taxable year of inclusion. Any amount required to be included in gross income by a United States shareholder under paragraph 1 with respect to a CFC year shall be included in gross income for the shareholder's taxable year, which includes the last day on which the shareholder owns within the meaning of section 958A stock in the controlled foreign corporation during such CFC year. 4, regulatory authority. The Secretary shall prescribe such regulations or other guidance as may be necessary or appropriate to carry out the purposes of this subsection, including regulations or other guidance allowing taxpayers to elect or requiring taxpayers to close the taxable year of a controlled foreign corporation upon a direct or indirect disposition of stock of such corporation. B, coordination with Section 951A, Section 951AC, as redesignated by Section 70323A2, is amended. 1, in paragraph 1 by striking in which or which the taxable year of the controlled foreign corporation ends, and inserting determined under Section 951A3, and 2, in paragraph 2 by striking the last day in the taxable year of such foreign corporation on which such foreign corporation is controlled foreign corporation, and inserting any day in such taxable year. C, effective dates.
1. In general, the amendments made by this section shall apply to taxable years of foreign corporations beginning after December 31st, 2025. 2. Transition rule for dividends. A dividend paid or deemed paid by a controlled foreign corporation shall not be treated as a dividend for purposes of applying Section 951, A2B of the Internal Revenue Code of 1986 as in effect before the amendments made by this section if A, such dividend, 1, was paid or deemed paid on or before June 28, 2025, during the taxable year of such controlled foreign corporation, which included such date and the United States shareholder described in Section 951A1 of such code as so in effect did not own, within the meaning of Section 958A of such code, the stock of such controlled foreign corporation during the portion of such taxable year on or before June 28, 2025, or 2, was paid or deemed paid after June 28, 2025, and before such controlled foreign corporation's first taxable year beginning after December 31st, 2025. B, such dividends does not increase the taxable income of a United States person, including by reason of dividends received deduction and inclusion from gross income or an exclusion from Subpart F income. Chapter 4, investing in American families, communities, and small businesses. Subchapter A, permanent investments in families and children, Section 70401, enhancement of employer-provided child care credit. A, increase of amount of qualified child care expenditures taken into account. Section 45FA1 is amended by striking 25% and inserting 40%, 50% in the case of an eligible small business. B, increase of maximum credit amount. Subsection B of Section 45F is amended to read as follows. B, dollar limitation. 1, in general, the credit allowable under subsection A for any taxable year shall not exceed $500,000, $600,000 in the case of an eligible small business. 2, inflation adjustment. In the case of any taxable year beginning after 2026, the $500,000 and $600,000 amounts in paragraph 1 shall each be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under Section 1F3 for the calendar year in which the taxable year begins, determined by substituting calendar year 2025 for calendar year 2016, and subparagraph A2 thereof. C, eligible small business. Section 45FC is amended by adding at the end the following new paragraph. 4, eligible small business. The term eligible small business means a business that meets the gross receipts test of Section 448C, determined A, by substituting 5 taxable year for 3 taxable year in paragraph 1 thereof, and B, substituting 5 year for 3 year in paragraph 3A thereof. D, credit allowed for third-party intermediaries. Section 45FC1A3 is amended by inserting or under contract with an intermediate entity that contracts with one or more qualified child care facilities to provide such child care services before the period at the end. E, treatment of jointly owned or operated child care facility. Section 45FC2 is amended by adding at the end the following new subparagraph. C, treatment of jointly owned or operated child care facility. A facility shall not fail to be treated as a qualified child care facility of the taxpayer merely because such facility is jointly owned or operated by the taxpayer and other persons. F, regulation and guidance. Section 45F is amended by adding at the end the following new subsection. G, regulations and guidance. The Secretary shall issue such regulations or other guidance as may be necessary to carry out the purposes of this section, including guidance to carry out the purposes of paragraphs 1A, 3, and 2C of subsection C. G, effective date. The amendments made by this section shall apply to amounts paid or incurred after December 31st, 2025. Section 70402, enhancement of adoption credit. A, in general. Section 23A is amended by adding at the end the following new paragraph. 4, portion of credit refundable. So much of the credit allowed under paragraph 1 as does not exceed $5,000 shall be treated as a credit allowed under subpart C and not as a credit allowed under this subpart. B, adjustments for inflation. Section 23H is amended to read as follows. H, adjustments for inflation. 1, in general, in the case of taxable year beginning after December 31st, 2002, each of the dollar amounts in paragraphs 3 and 4 of subsection A and paragraphs 1 and 2A1 of subsection B shall be increased by an amount equal to A, such dollar amount multiplied by B, the cost of living adjustment determined under Section 1F3 for the calendar year in which the taxable year begins, determined by substituting calendar year 2001 for calendar year 2016, and subparagraph A2 thereof. 2, rounding. If any amount as increased under paragraph 1 is not a multiple of 10, such amount shall be rounded to the nearest multiple of 10. 3, special rule for refundable portion. In the case of the dollar amount in subsection A4, paragraph 1 shall be applied A by substituting 2025 for 2002 in the matter preceding subparagraph A, and B by substituting calendar year 2024 for calendar year 2001 and subparagraph B thereof. C, Exclusion of refundable portion of credit from carry forward. Section 23C1 is amended by striking credit allowable under subsection A and inserting portion of the credit allowable under subsection A, which is allowed under this subpart. D, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2024. Section 70403, recognizing Indian tribal governments for purposes of determining whether a child has a special needs for purposes of the adoption credit. A, in general, Section 23D3 is amended. 1, in subparagraph A by inserting or Indian tribal government after a state. 2, in subparagraph B by inserting or Indian tribal government after such state. B, effective date. The amendments made by this section shall apply to taxable years beginning after December 31st, 2024. Section 70404, enhancement of the dependent care assistance program. A, in general, Section 129A2A is amended by striking $5,000, $2,500, and inserting $7,500, $3,750. B, effective date. The amendment made by this section shall apply to taxable years beginning after December 31st, 2025. Section 70405, enhancement of child and independent care tax credit. A, in general, paragraph 2 of section 21A is amended to read as follows. 2, applicable percentage defined. For purposes of paragraph 1, the term applicable percentage means 50%. A, reduced but not below 35%. By 1 percentage point for each $2,000 or fraction thereof by which the taxpayer's adjusted gross income for the taxable year exceeds $15,000, and B, further reduced but not below 20% by 1 percentage point for each $2,000, $4,000 in the case of a joint return, or fraction thereof by which the taxpayer's adjusted gross income for the taxable year exceeds $75,000, $150,000 in the case of a joint return. B, effective date. The amendment made by this section shall apply to taxable years beginning after December 31st, 2025. Subchapter B, permanent investments in student reforms into tax-exempt institutions. Section 70411, tax credit for contributions of individuals to scholarship-granting organizations. A, allowance of credit for contributions of individuals to scholarship-granting organizations. 1, in general, subpart A of part 4 of subchapter A of chapter 1 is amended by inserting after section 25E the following new section. Section 25F, qualified elementary and secondary education scholarships. A, allowance of credit. In the case of an individual who is a citizen or resident of the United States within the meaning of section 7701A9,